Fear is back, and the stock market continues to struggle. We stopped going up, we're putting in full candles, and now we're going down just like the last time. And what's so notable is that we're spending multiple days below the 50-day moving average. We now put in 5 red days in a row. The market appears very weak, and fear is definitely back. So what exactly do we do? Because this is starting to sound a little bit scary. Well, we talked about this the last time we had this pattern set up, which is basically number 2, 3, 4. We went down by about 10%. We've talked about what a 10% dip would roughly mean. It means that we're going down to roughly our all-time high. If this confuses you, please make sure you stay tuned because today's video is very critical. We're getting awfully close to a gap fill here, and the market looks fairly soft. I also want you to pay attention to today's high of the day. What is it? It's 504.13. But why does this matter? It matters because when we look here to our monthly low, which I've been talking about extensively, the previous monthly low is 504.91. So what does that mean? It means that today, our high of the day is almost a perfect rejection on the monthly low. And what do we have? High, lower high, lower high, lower high, lower high, lower high, low, lower low, lower low, lower low. If you're not noticing the pattern yet, if we fail to form a daily higher high into tomorrow, the weekly candle looks awfully soft. And we're losing our megaphone here. Things are starting to look shaky. That's the best way I can describe it. But what do we do with all this fear? I'm going to tell you, so please make sure you stay tuned. Read this headline here. Netflix blows past estimates and as subscribers jump 16%. Okay, nice headline. Netflix adds 9.33 million customers. Gains will slow. They changed the headline before I recorded the video, but they're telling us that they crushed subscribers' estimates by nearly 100%. What's the reaction, though? Well, Netflix is here on the right-hand side, and it's currently down by about 3%. What's so interesting, though, is that yesterday I said whether the dip was for buying or the rip was for selling. They don't even seem to know what to do on Netflix. Look at this massive range, right? Good news was good, and then it wasn't. The range on this one here is from low to high. It's 565 and 640. That's nearly 100 points. So from high to low, that's a decline of over 10%. So what does this mean? It means that even though we're getting a positive number, just like we did with JP Morgan, the reaction is not so pretty. So we had a meteoric rise for JP Morgan, right? All the way up. And now the fade is starting. Well, Netflix pretty much did the same thing all the way up. And now the slide is starting. What's so interesting, too, is that we see that we got a beat, we got a miss, and we got a beat. Here we got a beat, we got a miss, and we got a beat. The stocks are acting very similar. Beats are not giving us the same reaction they were before. If we look here to the heat map for the day, yes, fear is back and people are selling. If we move to post-market, it's only going to be Netflix that's down. And the reason why I find this particularly notable is because we've already talked about how bad news is piling up, and that's adding a lot of pressure to stocks. Let me give you a couple of quick highlights here on Netflix because I wrote this down after listening. There was a couple of really big headlines that were good and some that were bad. So part of the reason why the stock shot all the way up were some positive headlines, including ad-supported tier is working. Password crackdown is working. That's why they were able to add. I think it was roughly, here, I got the screenshot right here. They were able to add 9.33 million streamers compared to the 4.84, which was the estimate. That's a crush. That's a really strong number. If you guys don't mind, please considering to smash a thumbs up or subscribing to the channel. I would greatly appreciate that. Thank you ahead of time. So that number's a crush. So that helps to explain the reason why Netflix went up. But then why did it go down? Well, here's the flip side to the story. They told us that they're going to be, here's the parts that made the stock go down. So what made it go down? There were two things. The first one was that soft guidance for Q2. So they're not sure what's going to happen next quarter. They might just be lowering the bar so it's easier to beat next time too. That's very normal for companies. The other thing that they pulled is that they're going to be pulling guidance on future subscriber growth. So that number I just showed you, they're not going to show this anymore. And this has been the number one driver of Netflix stock. So they're going to pull that. They're going to pull the forward guidance. And they've also said they're going to spend less on future content, which means they're going to be relying on old content. I'm not sure what all that means, but the market voted and we're down by about 3%. What's the net effect to the S&P though? We're down by 8 cents in after hours, basically a nothing burger. Why? Well, because Netflix is not a huge block. The other blocks that are bigger are going to matter more, but this could have a delayed effect where we're going to have this come in tomorrow. Why? Hey, bad news is piling up and people seem anxious to sell. So that's exactly what could happen. All right. The next thing I want to talk about here is what exactly we need to do. I don't want to waste any time, so let's make sure we jump into that part. So I talked about my notes here briefly. I'll leave a video for you at the end if you want to jump into these. But what it really means is that this 480 number seems more and more likely. I don't want us to go there. I don't want a stock market crash. I don't want a correction. But I also don't want to lose more than I need to. So there's a saying that I often like to use: being wrong is different than staying wrong. So if you're bullish and you're like, well, I think stocks are going to bounce. I've been seeing that in the comments repeatedly. People are just saying, this guy's wrong. He's too bearish, blah, blah, blah. Well, I have evidence. What do you have? So when I look to here and I see this recipe setting up, stop going up, full candles, which means lagging momentum. We went through that yesterday too. We look here to DIA. We talked about how we have a lot of candles that are not full, right? They're only two that are actually hollow. And we note that we have a lot of red candles. We look over here to the S&P. Man, it doesn't get much prettier. It's been getting worse. So it means the stocks are softening up. And we're starting to see even more weakness. Not only do we see a similar technical pattern around the 50 DMA here, we note that if this continues to play out from high to low, this was negative 10%. So if we're going to continue to go lower, I talked about this on the pre-market stream. I basically said that there's two things I'm watching for. I'm watching for back above 505 or falling below 497. We nearly got a tap to our gap fill here. So if we tap it and we hover, man, that's bad. There's no way around it. I'll show you what bulls want to see on this chart by going over here to NVDA. So if we have a look here, what happened on the first test of that key area or the 50 moving average? Well, we bounced. That's exactly what we want to see. We want to see bulls show up and actually buy it up. And the reason why this is particularly notable is because tomorrow we're going to be closing out this weekly candle. And if we look here, I'll try to make this as simple as I can because I know this part confuses people. But we talked about the monthly low. And look here, right? We were clearly going up. Then we went sideways. Now we're going down. That same pattern is here. High, lower, high, lower, high. Low, lower, low, lower, low. And all I'm talking about is 504, which means the monthly low. It doesn't even mean we're going to get back above 509 or last week's low. All this means is that the market looks soft. It looks weak. It's likely going to close weak. It's a matter of how weak. We're currently at the low of the week. This is not good. So we blew through all the previous areas, right? 504 was supposed to be a good area. We got a small bounce. 497 and 480 are all we have. So what I would encourage you to do is to make sure you think about what could go right into the end of the week and what could go wrong. I've given you the key numbers, but what you can also do is tune in at 9:15 a.m. tomorrow, and I will take you through the stock market open, including Q&A at 9:30. The very last thing I want to leave you with here is that we want to make sure we're not falling victims to our emotions because we generally want to buy fear. If we go to extreme fear, even better. But like I mentioned, I thought the Netflix might be a sour reaction, not because they didn't crush earnings, because man, they crushed it. No way to misinterpret that. We talk about stocks that run into earnings have to crush to keep going higher. Man, they double the subscriber growth, and they're a company worth $264 billion. I would call that a crush. So if crushes don't work, what will? I'm not sure. And that's the part that's a little bit tricky here because I would love to have all the secret answers and tell you exactly where we're going to go. All I know is that from experience, when we start seeing warning signs on the daily chart, that's not good. When they feed through to the weekly chart, that's quite high time frame confirmation. We now have multiple lower highs and multiple lower lows. And then finally, we're going to have to wait all the way until the close of this month to see if this actually holds or not. And then to get a set of lower highs and a set of lower lows, we're going to have to wait all the way until the end of April. Are you ready to wait for 6 more weeks before you start to take action? I would hope you don't. I don't want the market to go down like I just said, but this is the reality we're living in. That video is now queued up here on the left-hand side. If not, maybe you want to subscribe and come hang out at 9:15 a.m. tomorrow. Thank you very much.